The fact that you have not lost money is not a good thing. It's a bad thing. That means you haven't taken the risks, you haven't done the investments. All of those costs for the first 12 months, effectively, we make a loss on every customer that we acquire. Then you have to have conversations every end of the year where everybody wants more money. If I would come in and I would burn $1 million next year doing what you do, I would be probably much bigger than your business. You're working in the business, but you're not working on it. Your job is to get loads of funding so you can,
Welcome to BlackBox. Today, it's going to be me, Nix, and Matis.
Yes, sir.
I have a business that does $1 million a year. Matis has businesses he owns that do $200 million per year. And today, we're going to talk about planning your next year. Is it important? Is it BS? Etc. And we're going to give you actionable insights and advice how to do it in which stage. We're going to talk for about 2 stages, going from 0 to 1 million. And then we're going to talk about going from 1 million to 100 million, because Matis has done it as a CEO and I'm trying to do that. So it's going to be an interesting conversation. So let's start off. Is it important to even plan your next year, or is it fully BS? No, nobody cares, etc.
I think it's very important to plan, and it's very important to hold in mind the situation that you're in with your business. Either you're a startup, you're a small company, in which case you plan short steps ahead because everything changes every 2 weeks, every month. If you're a bigger company, if you're a big company, meaning let's say 100 or hundreds of people, 50 plus million revenue, then of course planning is a very important step, because with that you are coordinating resources and setting priorities. And if you don't do that, it's a mess and you'll start losing a lot of money. So it depends on the size, and the size dictates how long you plan ahead. That's one thing for sure.
So basically a smaller company, less planning, a bigger company, more planning.
I would say different type of planning. Let's say from my experience, a startup plans smaller steps ahead, and instead of planning for how we're gonna reach some kind of a budget, because budget is secondary for a small startup. It's more about planning sales outreach efforts, things that will bring us revenue, things that will bring us funding. How many funding calls, meetings do we have? Planning actions that will bring in business. While for a bigger company, the business is already there. It's already generating revenue. There's retention and things like that. And you need to plan for efficiencies. You need to plan for more expansion and so on. But it's more about resource coordination. While in a startup phase, it's more about getting more activity into the door. That's.
And when we say planning, it's like the same stuff as setting goals, or is it something different in your opinion? It's kind of the same thing, right?
Setting goals or
business
planning, I would say
right?
Yes. I probably can speak from my experience. It was always about setting some goals, but like I said, keeping in mind that in a smaller company, those goals, they keep changing, and so you have to have a plan and process where you're able to change it every month, every quarter. While with a big company, you change your plans every 6 months or every 12 months or so on. But I would call it planning in one way or another. But probably more importantly, in a startup, if we're talking about difference between startup and a big company, is in one case it's more about doing and trying out things and testing things, and in the other instance it is more about budgeting, planning, prioritizing resources. So it is a different form of planning. Yeah. So it's in one case it's more about testing and trying and experimenting, and so you have to plan for how many experiments you can do, how much money you have before you run out of it, and you've tested the different sales channels and things like that. So probably not planning, but more like testing. It's more about testing and experiments because you haven't figured things out.
Let me show you something that I'm doing currently for Q1 of 2025. Can you share the screen? So this is how I was thinking about it. I was watching the big interview with one also founder who has $1 billion company. Okay. And I came up with kind of putting the target for the team, basically the boat. So I set for ourselves 200K per month cash collected. I know what you're going to say, okay? But with profitability at 30%. And I wanted our paid ads to be at 400% return on cash from new customers. And our goals for sales team, generating 40K plus per week, closing at 25%, average upfront collected 2K plus. And our setter team, basically people who are setting appointments, calling leads, setting appointments, to have at least 5 meetings booked per day. and average team member in the setting department generating at least 20,000 per month. Refund rate, content plans. We plan to launch a new product, and organic and operations, such as like how much hiring activities we plan to do. So I set a goal to do 10 to 20 hiring interviews per month.
Why
all
do you
the
set
time.
the hiring activities?
Because I was thinking I will put more targets and I will probably fire more people. So I need resources of new people coming in, because I expect to fire people who underperform, because I was thinking about it. So would this be okay, or what do you think? Because you have more experience than me in business. What do you think about these kind of targets?
So first of all, my feeling is they are operational. They're
Okay.
not, so what's the strategy? So probably one way of how I would look at it is I would start with the narrative and the story of what are you planning for? What is the strategy? What's the time period you're planning for? Is it for the next year or for some
For
kind of
Q1.
For Q1. Okay, it's for
Q1.
Q1.
Yeah.
So this is a tactical plan for your next 3 months that is broken down into specific targets, basically for department and effectively for specific people.
Yes.
That's how it feels like.
Yeah.
Okay. I mean, it sounds good. It makes sense.
What's kind of missing?
What's missing for me if I was an employee or a team member?
Let's imagine you're owning the business, but I'm the CEO. Like, what would you
what's
say?
missing completely for me is how does this tie into the financial plan or into the P&L? So it does say, okay, you want to generate 200,000. First of all, business generating 200K. What is 200K? Is it the revenue? Is it cash flow?
Cash flow per month.
Cash flow per month.
Yes.
Why would you target cash flow? You need to you don't target cash flow. You target, profitability. You target revenue, sales, and things like that.
Well, it's basically
in this case, you mean revenue.
Yeah.
Okay. So that's probably okay. That's fine. Let's rename it to 200,000 revenue for the quarter with net profitability. Or what is profitability? Because it can be gross profit. It can be
okay.
It can
be, so more precisely, what do you mean when you say these things? Oh, sorry, I mean gross profit.
You mean gross profit? Okay.
Yes.
30% plus. So what would be missing for me is a little bit more of a end-to-end story with these deliverables and targets. So what I mean is, okay, so let's say next year we want to do, how much you want to do in revenue?
3 million plus.
3 million plus. Okay, so 3 million plus in revenue, but your quarter one target for revenue is it's 600,000. Yeah, it's per month.
Yeah.
Okay, gotcha. Okay, that makes sense. So I would lay out, okay, so overall I want the company to look like this as follows in terms of finances. 3 million revenue, some cost positions, net profitability. I guess that is more or less good. Maybe number of new customers per month, or some kind of sold KPI numbers.
How many units I need to sell?
For example, high level general points like that. That would be the highline. The summary. I would be interested in a bullet point, 2-3 bullet points in terms of where does this business budget come from? Does it come from just doing what we do already, but at scale? Does it come from adding more sales channels? Just generally as a story. If you would tell an outsider a story about your business for the next year in simple words, in a 5-minute story, right?
Okay.
This is, it's missing here simply because you haven't put it there, and maybe that wasn't the intention. If you give this on a regular basis to an employee that sees this every day, he doesn't need a story. I mean, if you're talking like an annual planning with top management or with people that you build this business for, and you plan the year ahead, then you want the overall big picture. You want the story of how you think that the big picture can be achieved, and then you break it down into specific Q1, for example, goals. Yeah. And then you break it down into specific actions and deliverables for, departments or people, etc. Then it makes sense. So what you're showing me is basically bottom up, already deliverables on an individual level, but I'm missing how that ties into a bigger picture. That's what I would say. But other than that, I mean, it's not much.
And I think what I'm gonna do differently, and because I used to do it also, but I used to be not looking at it every day or every week. So the thing I changed is actually this. So I added a scorecard, which I think for businesses looking at this could also be important. Probably businesses below $1 million a year. If you're doing more, probably you don't need this or you have different solutions. So I was putting the weekly target. So I broke down the monthly there, which you saw, and then I broke it down into weekly targets. And then every department or everything gets tracked, so we can see, are we on pace, off pace? Because these are new things I added like yesterday, basically.
Yes.
And then I'm going to track it and see what's happening regarding also operations. So we're going to look at how many interviews have we done, like the stuff I was talking about. Also for the content, we broke down what kind of videos need to be produced.
Yeah.
Like videos like you and me right now for our channel, it's like 1 per week needs to be done.
Yeah.
Short form 7 per day. Big videos like we're gonna do like case studies, etc. Like 0.5 per week. So like breaking it down so we can see, is it growing, not going, or we doing the inputs basically. That's what I want to say.
Let's. It's This is very granular. This is very detailed, and which is very good. And I think no matter how big the business is, you always need to break it down into detail level KPIs that you can give to specific people so they know what they need to do. So we, for example, in my business, one of the big headcount is in the collections. So when we have loans and they need to be repaid, we have people that call up, remind, ask for scheduled repayments, etc., etc. And we have hundreds of people in different companies that basically sit on phones all day and collect from people in terms of their payments. And they have KPIs like in and out with everything that you mentioned, like outbound calls that we need to make per day. What percentage of people that you need to call do you actually make the calls to? How many pick up from those that you pick up? How much time you spend, and so on and so forth. And so we have that a lot in a very detailed level. But again, as a business owner, my job is not to set such targets, because I used to do that a lot and I was involved very much in the detail, and I would look at what's missing. I would suggest, okay, let's track this, let's track that, etc. But as a business owner, my job is to make sure I do not have to look at any of that.
But that's with a different role.
That is a different
you
role.
Going to 100 million per year, it's probably you did it.
Yes. One important point that I do remember from these times of setting KPIs and measuring things is that any report that you do, it needs to show something meaningful or something that you look at the report and you make a decision based on that report. And so what I mean is there's many things you can measure, but you can simply look at some efficiency or whatever, some deliverable, and you look at it year in, year out, or like on a daily basis, but you never change any decision in your business. And people like measuring things, but it's oftentimes purposeless, and it just generates more work. So I would measure, for example, I don't know, how many new loans do we give every day in one of the companies. If it drops, then I do some action. Then I start asking what's happening, like, et cetera, et cetera. Then I start pushing. I don't measure, let's say, I don't know, how many clients started registration versus how many made the second step of registration or like completed registration year in, year out, because I know that I will make no difference in my decision making for the business based on that KPI.
That's a great thing. That's a great idea.
And there's therefore no point to measure it. So that's
because
kind of
this can be addictive. The scorecard thing can be very. You can like, add more.
Exactly. And it adds more stress and it adds more work for employees, because if you look at a bigger scale, gathering data from databases across different countries on different servers, that alone takes time, and that alone is a cost to implement. So I remember also for our investment platform, Scalability, I asked for dashboards to see how much money is on the accounts but not invested, how much is invested for how long, then when it comes back, etc., like a very detailed level view. Once we kind of analyzed it and had a look at it for some period of time, I understood that, okay, so I look at it once and then nothing really changes. I don't make any different decisions. Yeah. And therefore, it's okay to look at it once and maybe like follow it through a little bit, but it's not something that you would set as some kind of a KPI target or part of your reporting process, because you make no difference in your decision making. Those reports, whatever they show, you don't make any different decisions. While, let's say, if we have, I don't know, an outflow of funds and our assets under management are dropping, that's a very simple KPI. It doesn't really require detailed reporting, but that will be something that will trigger some kind of decision making or action from me. Yeah. So there needs to be an assessment of whether your reports actually make you make some different decisions or some actions.
What would
That's
you
the
look
point.
at? Like, I got me thinking to my marketing kind of report, because I look at, okay, how much money did we spend that day? I look at how many leads did we generate? I look at what's the cost per lead? I look at what's the cost per meeting booked? And I look at how many sales calls did we book from these leads? And then I look at a monthly basis, how much it is costing us to get one customer from that lead source or that campaign.
Right.
In this scenario, what do you think is the main KPI? Because I look at all of these things, and then because you asked me like which KPI will make my decision making
Yeah,
change.
different. Yes.
I guess the amount of leads, but again, yeah, they're good or bad, you know.
So again, for different businesses, a different story, and we're talking more or less kind of like large number businesses, consumer based, not like when you're building one factory and
Yeah,
it's a
yeah,
different story. So from that perspective, I like the view of a customer lifetime value, where it's more it tells you how much money you're making from every customer you attract over a period of time. And the most important reason why that is very useful, unlike many other detailed KPIs that you mentioned, is because that tells you how aggressive you can go in acquiring those customers. So, for example, what I often have heard in the past in my businesses is that we pay $50 euros or 100 euros to acquire a new customer. And then some managers will say, that's crazy, that's like extremely high. That number, 100 euros to acquire a customer, sounds very high. And I'm asking, like, based on what? What's the reason? Why does it sound high if, for example, we know that the customer lifetime value is 250 euros? Yes? And so unless you have a good understanding of what is your customer lifetime value, and that, of course, depends on your funnel. You attract, I don't know, thousands of customers, then 80% of those start registration or start going into the funnel, and then 10% are left. And from those 10%, you know that on average, you make per customer $1,000 for over a 24-month period. Okay, that is your customer lifetime value. And then you measure how much it costs you in marketing to get them to the top of the funnel, which is all your outreach, different types of activities. And then that cost you divide by your actual number of clients that make a purchase, that pay you money. That gives you your customer acquisition cost, CAC. And so I think a very standard and good method is then therefore to compare your customer lifetime value to customer acquisition cost, to give you a sense of how aggressively you can go after your customers. But because it might be that you make 1,200, let's say 1,200 euros per customer per year or per 18 months, but you only spend 200 euros acquiring that customer. That means you have a customer acquisition cost to customer lifetime value of 1 to 6. So every €1 you spend, your customers generate 6 euros. Maybe you want to spend 6 euros per customer to generate 6 euros from that customer, and you're going to be far more aggressive acquiring the customers, and therefore you can get a leading market position in a shorter space of time. So those are all considerations that need to be taken into account, without which a lot of detail, the funnel KPIs are not meaningless, but you're kind of missing the bigger picture.
Makes sense. Makes sense. Would you look at like lifetime gross profit per customer, or would you look
all sorts of? So we, for example, have a reporting. We actually I can pull off some of it if we can get rid of the logos, because I don't want to show which company this is for. Okay. So we can get you the presentation. I mean, like it's detailed. I'll get it to you right now. We look at revenue per customer. So that's a lifetime revenue per customer. We look at what we would call risk-adjusted revenue per customer, which means we take in our lending specific case. So basically, like gross profit per customer, right? And we look at net profit per customer, which is taking into account all the marketing costs, all the provisions for bad loans, and distributing the fixed costs, which are not allocatable to like one specific customer. But we take a 12-month period. We acquired 300,000 new customers. We incurred 20 million of costs, and we split those 20 million of costs across those 300,000 customers to give us an indirect cost per customer number. And so that is basically a full P&L per customer. And we have like a revenue level, we have gross profit level, and we have net profit level per customer. And what we know for sure is in the first, 90 days, 6 months, we have a J curve. We're losing money. And then depends on the business case, depends on the country. You start making money in 12 months. In some cases, only in after 18 months per customer. Yes. And then if the customer is with you for 3-4 years, then of course you just keep making money after that 12-month period. But let me show you. I'll give you the actual report. We can pull it up.
So basically, I just shantagized Matis, made him, show some real data from a real business. So what are we seeing right now on the screen? What is this stuff?
You're revealing, no, exposing me.
You're exposing the 200 million
exactly,
owner.
Exposing the truth. So basically, it's a relatively simple graph showing what we talked about, which is the lifetime value, right? How much money we make per customer over the lifetime of the customer, right? Usually in our business, consumer loans, the customer comes, they take a loan, they repay you over a couple of months. Then on average, there's, let's say, like 6 months pause, then they might come again and take another loan. So that's, the engagement is usually like, 12, 24, sometimes up to 36 months. And so the logic is very simple. If you look at the graph, you see the light blue line at the top, which is about 200 euros. Yes. That's your 36-month lifetime value of a customer. And here we take into account lifetime value shows the actual operating profit. So it's not how much money we generate from a customer. It's actually how much profit, but operating profit we generate from a customer. Meaning we generate some money from the client. It takes us some marketing costs to acquire that client, and it takes some fixed costs to process, payments, blah, blah, blah. And so we have some money left, and that's the gross profit per customer over the lifetime of the customer. So on a 3-year basis, obviously, the longer the lifetime, the better the higher this lifetime value, because the more you will have received from the customer. And so therefore, so we make for a customer that's with us for up to 3 years, on average, about 200 euros. Yes. And therefore, if the customer is with us for 6 months, that's the bottom dark blue line.
This is the 6 months.
Yes. So every month that blue line will go up, and that's how the chart continues, right, all the time. And so you see that in the short term, 2024, the graph here, yes, exactly, April, etc. It's a deep negative because we have just acquired the customer. The specifics in this case is we acquired the customer, and the first transaction, the client pays us nothing. So they take a loan and they repay us the same amount. So it's first loan for free. So therefore, we simply incur the cost of acquisition, risks, etc., etc. So that's why that line is negative. It's minus 50 over 50 euros per customer, and that acquisition cost and all of those costs for the first 12 months, effectively, we make a loss on every customer that we acquire in the amount of about 50 euros. Yes. And so the more customer stays with us, the more that goes into positive, and over time we make up to $200 euros per customer in gross profits.
This is per year, right?
So that is a 3-year line.
3 years.
And you see that's because 2020 and 2021, you can only measure customers' lifetime value for a 3-year period for those customers that you have acquired not later than 3 years ago, logically, right? Because you then don't know how much they're gonna pay you unless you've acquired them in the past. And so that's why we know the customers we will acquire just now, 2024 April, etc., they are losing us money. If we're going to look at this graph 3 years later, they're going to probably be
here,
along those lines. Okay, and so that's why every line is kind of coming up from the top, which is the longer term, making less money because the period is less. Okay, that's kind of intuitive. And so, well, it's not intuitive; it needs the explanation, obviously. But and then you have these blurred line of green to red, and so this just shows you actually that our fixed cost base has increased. I'll explain why. So what it means is, in 2022, when we acquired customers, per new customer, cost per new customer was about $50, 50 euros up to 100 euros. Yes, you see the green, very green.
This one?
Yes, for like 50 euros. So back in 2022, it cost us about 50 euros to acquire a customer, all sorts of costs included. And that cost has tripled over
now it's
3 years.
151.
Yes.
Is it based on what? Is it the ad costs are up?
It could be based on, that's where you need to understand how you're looking at the data. It could be based on the fact that your the number of customers you acquire, let's say, is fixed, but the costs have increased, which would be a bad scenario, right? It could be based on a scenario where your costs are fixed, but you are acquiring less and less customers. Yes,
Yeah.
also. So it can be different things. So that is the question. Why is this happening? In our scenario, it is happening because our cost base has increased significantly. The business has become more, heavy. There's licensing, there's regulation, there's all sorts of restrictions that we have on the company that has made the cost base bigger. And so every new customer we acquire these days, this year, is just simply 3 times more expensive than what it was 2022.
But
for example, so that's bad. Effectively, it's
but for
bad.
this business, are you getting more customers right now than in 2022, or the
yes,
same?
Yes. We are getting more customers.
Even
in terms of
though.
absolute count,
Yeah.
we're getting more customers. We're getting close to 10,000 customers per
And
month.
here you can see direct costs, which could be like marketing, I guess, and indirect costs is more.
Yeah. So exactly. Direct costs, that's marketing and the borrowing costs, as we call them. So the money we have to pay in order to fund the issuance of the loan. Indirect costs, those are effectively salaries, premises of offices, branches, and things like that. So those you combine, and then you get your total cost.
Interesting.
Customer, yeah.
Cool. Thank you for sharing this. I think it's interesting for me as a business owner as well, and I think for many viewers probably as well. And I think the thing I would love to put focus on is, I think maybe I noticed it, but it's like you are getting thousands of customers per month.
Yes.
And this is also important, the top line. I think many people get stuck in the nuances, not even realizing, do they have a business that can actually scale to any multiple figures? Like that business in general, how big is it? Approximately, maybe.
It's about 50 million euros revenue.
Per year, yeah.
Per year, yes. Cool. About 500 people and so on.
Cool. But it's pretty, I think, I don't know your specifics for your business, but it would be amazing if I could get customers for 150 euros who buy my service for thousands of euros.
Well, right? That would be like would be like a Meta Apple type of business model. Yeah.
Like
I mean,
printing money.
You customer acquisition to LTV. If we look at that ratio, usually it's a few times. Let's say 3, 4, 5. 10 times is already great.
That's insane. Crazy.
Yeah.
It's like insane.
There are some businesses, effectively, like the best businesses, tech businesses, where you can replicate additional product at zero cost. You just program more. In those instances, yes, you can acquire more and more customers at basically zero cost. Yes, and those can get into this position of like you can pay $100 to acquire a customer that pays you 1,500. And those are very rare cases.
Yeah, and that's why software is very valuable.
Yes,
as a
exactly.
To sell
yes, it's easy to scale. Yes, and every customer is cheaper.
Let's go back to business planning. We have a couple of parts we're going to talk about. The first one is reflecting on your last year, or reflecting on the year you're currently at, and thinking about the next year. For this, I think my thinking is, hey, I need to look at what kind of things I did great that year, what kind of things did I do which performed not as I expected, or the result is weak. And then I looked at what kind of things I did that had the biggest ROI. And the thing, what I noticed for my last year is there are not so many things, not so many things.
That you did bad?
No, not so many things that I'm like, okay, these are good milestones. Right. I actually did something that will like truly change something or improve something. Not so many things. And I realized immediately when I was looking at it, I was like, shit, I can do way more.
Yeah.
Like that was like my immediate thinking when I reflect on my last year. What do you think about reflection or looking at your past year?
Oh, I mean, you need to do reflection on a personal level as a business owner, manager, etc., and you need to do a reflection, obviously, on the company-wide goals level, etc. I mean, for me, reflection is very transactional and it's very dry and it's fairly black and white. So let's say again, I like numbers and finance, so I go back to the budget. Yes, the budget for me is and the bigger the company gets, the more the budget plays an important role, because that's what coordinates everything. That's what tells you whether you pay bonuses or not, etc., right? Okay, so I look at whether we met the budget or not, but it's not a surprise at the end of the year, because we look at it every month and every quarter. We update the budget rolling forecast. Okay, so that's one thing. To be honest, a reflection on the year in terms of the business is more a stressful time for me, or has been, especially when I was a CEO, because at the end of the year, you have all the bad negative surprises in terms of some miscalculations, some taxes, some things that have not been booked correctly, and so on and so forth. And in a business that is multi-country, international, you always will have like housekeeping issues that appear at the end of the year. And oftentimes it's not positive. Oh, we forgot that we have this revenue or like whatever shit. It's always something negative. So that's one, that there was always some bad news at the end of the year. Second, at the end of the year, everybody wants to renegotiate their salaries, their bonuses. Everybody says inflation was so high, I need to get paid more regardless of how well they did. And so when you have, let's say, a team of, let's say, 15, 20 people, top management, which all make a lot of money, let's say 10,000 euros plus, then you have to have conversations every end of the year where everybody wants more money. And that's like, you know, and that, okay, so how do you control that process? And I'm still learning that. And one of the ways to control it is actually to pay bonuses, but not increase the fixed salary base, because the fixed salary base will keep on growing the next year and your bonuses will be calculated on this increased fixed salary base. So it's better to keep the salary, fixed salary as little as possible, pay bigger bonuses, because the bonuses next year will be based on that same salary level. You see what I'm saying?
Yeah, makes sense. Yeah, makes sense.
So that's, I mean, but everybody has their own way of planning, but that's something that I've kind of learned. But it's actually more stressful and unpleasant rather than, exciting. Obviously, like we are in some businesses successful, you make money and that's great, but and also in the reflection, what's very important is in most of my companies in November, December, you already start planning and budgeting for the next year. And that's also stressful because, you're ambitious. You want to push the team. They need to prepare presentations. We actually did one today, a review of the budget, which is way too late. It's 20th of December. It's way too late. But it's actually it's always been a stressful time in terms of this reflection and planning for the year. So it's not very exciting.
Okay. And the second part, basically, the first one was reflect. The second one is to set targets, goals for your teams. But this is more fun, right? It's like setting the targets, inspirations, like what I'm going to achieve, what I'm going to do, what I'm looking forward to, right?
Yes.
Any nuggets, any tips about doing that? Okay, we covered like my example about setting the targets, etc. Like what kind of advice do you have for some business owners
in
who
terms
want to
of
grow?
teams? Again, difference between when you're CEO, you're in the business versus when you're owner of the business. If you're in an owner's position, you care about the targets for the CEO, and you care about the overall budget, which is delivered by the team, and then you approve it or you don't, or you can challenge it, etc. And then the individual targets for the rest of the employees in the organization, that is work that needs to be done by the CEO and by the management. And that's the kind of like situation that I'm in most of the companies for the last few years. But if we're looking at some specifics, planning for the top management, let's say, that's what usually I was focused on when I was CEO in Avafin. So that was actually an interesting process where we would have these offsites, and I have also videos in my channel where we are planning the year ahead. Sometimes we're looking back a little bit. Mostly it was planning for the year ahead. And in those, every chief of the business, either that's chief financial officer, chief marketing officer, head of one country, head of another country, and so on and so forth, they would have to prepare their department kind of deliverables based on a budget that they're going to do for the next year, how they're going to do it. And then me as a CEO, we would first of all together work on it and see how it all fits together to deliver the targets for the year. And then I would have individual conversations with each of the chiefs to set their bonus package based on those deliverables. In cases where it's simple, it's a country manager. They deliver a certain level of profit. Maybe you say pay a percentage of the profit or something. It's simple. In case of CTO, head of IT, it's more difficult, right? How do you measure? Do they I don't know, reach targets with projects on time, and that's when they get paid extra or something. So there was a challenge there, but it was always a very structured. It has been mostly a structured process. And based on at the end of the day, based on the budget for the company. I can go back like 10, 15 years ago, and I did all sorts of experiments with what I call the personal PDPs, personal development plan. This is something that we did in JP Morgan when I was back in 2011. I was working in JP Morgan. We had all these personal growth plans, like what are you going to do in the company, what are you going to do personally. Obviously, it all tied back into some KPIs for the department you worked at. and there was a whole package. The package gets signed off by your manager at the beginning of the year. And then based on those targets that you kind of write up, there's some numbers, there's some text. Then you have this NME, needs, meets, exceeds, grading criteria. So let's say you have 6 targets for your next 6 months, right? Approved by your manager, discussed by your manager, tied into the KPIs of the department, okay? Whether it's, I don't know, like we had trades and different deliverables that we had to do. And then at the end of that reporting period, let's say at the end of 6 months, you give yourself an assessment of whether you did okay, which means meets. Did you exceed the target? You did great, E, exceeds, or needs means you kind of like underperformed, NME. So you graded, then your manager graded that, and if basically it matches for around 80% of the answers, that means you've delivered, your personal development plan, and based on that, you would get a bonus or not. So that was a very structured process, but you have to consider that was a process for a company which employs, I don't remember, well, like 300,000 people or so. So it was a
Did you try it in your
And my
businesses?
point, yes, I brought such things into my company, so which was a startup, and it was a lot of pointless activity, but it was experimentation for me as a manager of managing people. I was like, let's say 23, 24 years old, and I was carrying this over as an experience into my startup where we had 5, 10, 20 people. We also had this personal development plan. It was very cool because they never had experienced that. And I had this like template in my head because I had gone through that process myself in the bank. I remember asking them, okay, so apart from the business, what is your personal thing? Like what kind of courses, whatever shit you're going to do and so on and so forth. That was very exciting. We discussed this, and oftentimes it turned out from these honest conversations that some of these people don't even associate their future with the company, and they say like, actually in a year's time I want to have something else, I want to do my own company or something, which was interesting. So you could tie that in. So those were cool conversations. Nowadays I really don't care about any of that. Nowadays we have we have experienced executives who want to get paid a lot. My job is to make sure that they have a big playground, very ambitious plans, so that they have enough space in which they can perform. And my job is to make sure we can provide funding. Maybe later on the funding needs to be raised by the business itself, and that's it. And so that's how we roll. It's less emotional, less personal.
And the third point, after doing checking your last year, then setting ambitious targets and goals, number 3 is how you're going to execute.
Yes.
Most important thing, how you're going to execute.
I think that's already a managerial approach. Different people have different approaches. I'm a micromanager. I like control, and so therefore I would want to know in detail how a person thinks about delivering a specific target KPI project. Other people are far more macro managers. They delegate. They don't really care about how things get done as long as they do get done. I don't think there's a right or wrong way. These different styles match different times in the company in different scenarios. And so I would say, so remembering these distinctions is one thing. Second thing is very importantly in terms of execution, when you have a conversation with, and I have conversations with my direct reports, I would call them, people that report to me, is to ask them what is the plan of execution, what are the ways you're going to get this done. I was mentioning, I think, when we spoke in Latvia, in this example, where we now, in Mexico, we're working on getting customers for which we're building a lending product. So we don't lend money ourselves, we're helping other big companies to lend loans to their customers. And so it's a new business model in a country that is far away. We have a CEO, we have a country manager, and so we have to build everything completely from scratch. It's basically a startup scenario, right? We have obviously infrastructure knowledge that comes from years of experience, but that specific business case is a startup. And so how do we go about it? What do we need? We need to generate new customers. That's the key thing that we're missing. We have some funding, etc., but we need customers. So how do we get that? One option would be for me to go there to talk to different potential clients, try to figure it out myself, and then tell my country manager how to do that, or my operations manager, let's call it. Or the second thing is we agree with the operations manager that the target for next year is to land, let's say 5 big clients. By big, let's say certain amount of revenue on their side. And so then I asked them, how will you deliver in getting these 5 big clients? And let's say, and in our scenario, we have agreed that there will be a cold outreach direction in which there's a upper funnel of like a bunch of companies that they're gonna approach, not literally online, but through different databases and like paid tools, etc. And they will send our pitch decks basically about our company from a position that look at us, we can help you make more money from your customer base. Let's say you sell I don't know, electronics, and we can build you a lending product so more customers buy electronics from you, so you make extra money. So we prepare a presentation like that for a specific target audience, which is retailers that sell consumer electronics. So that's one. So then we agreed, okay, so my country manager proposes a plan of doing 25 such outreach, outbound activities per week, about 5 per day, yes, and then quality outreach, yes, but it's not like talking to specific people. It is basically sending out information, trying to get something. So the response rate will be maybe like 5% or so. So that's one avenue. Second avenue is, okay, and that was also proposed by the country manager, is to go to trade fairs, to go to conferences where our client is, not where we, as a fintech, where we hang out, where are a bunch of other guys that want to sell you some fucking services, but where our end client, which the retailer, is attending. And go to those conferences, try to get business cards, again, try to give our information about our company. That's another avenue. The third avenue is to go through private bankers, corporate finance officers, etc., that deal with our potential customer base, and they know managers in those in that area. And also, again, like go and have a list of such brokers that you can talk to within the next 30 days. And so that's like 3 outreach channels. And that is the execution. And then you follow through after a few weeks and see what works, what doesn't, and then adapt. So, for example,
I will add a framework to what Matis just said. I think I got this from a cool book I just started to read. So it was basically map out so we have targets. Let's say it's getting 50 customers per month with paid ads. So I would map out the process, like what needs to be kind of done or how the doing needs to be done. Then I try to get people inside of that position. Then I create a scorecard so I can track them weekly, monthly, or daily, or it doesn't matter. But so I'm looking at the score.
Yeah.
Then this was interesting, which we added, is a testing cadence. You ask that person to test, because here can be flaws. Let's say I wrote an email,
Wrong
which
input.
you need to send, right?
Yeah.
But I asked them to test at least maybe, not depending on the situation, maybe once a month, once a week, it doesn't matter, but test. And then for most of the positions and most of the targets, they should be related to getting new customers or making your customers worth more.
Yeah.
So I would look at how much it's costing us to get new customer at that position or doing that thing.
Yes, yeah.
A cool example how we're gonna do it. So we set a target to get more leads with organic content, and we set the target to do 3 videos per week. And the new strategy, which we're gonna change this year, because here you can see this is our English channel. We're putting like videos, but lead generation wise, we get maybe 1 book call per month.
Yeah.
So the change right now, what we did is adding a material for the video every time they can get it, like here. So we plan to get maybe people to opt in to getting that stuff, so we can actually get more leads. Because we used to do videos, but with now no CTA, just hey, we talk about this and that, blah blah blah. Maybe you like it, maybe don't.
Some way to close
Yeah. So now we're gonna do something different, because we were doing it for 1 year. We were like, fuck, it doesn't work. We need to change something. Plus, we don't have enough probably traffic.
Why didn't you try to change it faster? Because for 1 year, if it didn't work, or you didn't focus on it too much, it was just more on the side thing.
Yeah, good question. Probably,
To consider.
Because for our business, main driver of customers is paid ads.
Yes.
But we are seeing that cost per customer are growing, CPMs are growing. We need a second channel that can also be good for us to get it.
Yeah.
We tried a lot of cold emails, cold outbound, not so well. But right now, DMing people is working really well. Like on IG, like sending messages to people who follow, message you. That is working really well. We're getting
So you just follow where interaction comes from your anyone who likes your
Yeah,
content,
yeah. Likes,
or engages
comment,
with your
yeah,
content,
anything. Yeah, yeah.
and then you DM them.
DM them.
Okay, interesting.
Yeah, yeah. And then how it looks in real life, we can have a look at it. So let's say this one. So I think, yeah, here's an example. It's like, hey, Sergio, just noticed that you followed me. Are you currently looking to grow your business?
Yeah.
If they don't respond, we're sending like follow-ups.
Right,
Oh, now
right.
they respond, right? Oh,
Yeah.
you know, and we
Nice,
kind of
nice,
continue.
nice. That's
So
a good
that's kind
example.
of
Okay.
a thing we do. And currently, how much are we doing result-wise from it? So let me show you. So this is what's happening right now. So we're getting at least on average like 2 meetings per day that happened, and we already have gotten 3 customers,
Nice.
which is okay.
Yeah, that's
which
great.
is okay.
That's
right.
pretty great.
This is because this is first month, like
Wow.
right now, just started.
Okay.
So we're seeing it
That's
works.
a pretty cool idea.
And we put like a person, their KPIs, how much they need to produce, what's the benchmark.
Yeah.
And then, as I said, if they don't perform, we're gonna let them go, find a new person, or they're gonna outperform, grow, and make stuff happen. And a cool thing we did, and I love you to share the screen again, Mix. We added an efficiency tracker. Basically, like here's what's the problem. So you don't get meetings. I'm like, okay, but did you do the actions necessary to get them? So we put targets for how many posts need to be, stories need to be done, how many new conversations need to be started, and how many follow-ups need to be at least done per day. And here's a formula that basically divides the target with the actual thing and like multiplies them, and then you get a percentage.
Okay. How much of your time you spend on this?
Man, probably a little bit too much. I can I can imagine.
I can tell. Like, I mean, just a side note. So what you're talking about is call center management. You're not talking about running a business.
Yes,
This
maybe.
is call center management. This stuff should be done by a professional call center guy. Of course, that guy needs to be very sharp to figure out like these actions required. Like, it's not just executing something that is well established and simply needs to be like scaled or repeated. Okay. You need to come up with more ideas of how to engage more customers, blah blah blah.
Okay.
But everything you're showing, like not everything, let's say 90% of what you're talking about and showing is call center management. It's a sales outreach management. But there's a difference between running a company and running a sales outreach business. And of course, if the business is certain size and most of your activity is around that one thing, it totally makes sense. Of course.
When should you change the focus?
Well, when should you I would say, okay. So what's the target for you for next year in terms of revenue?
200,000 per month, 3 million top line.
3 million top line. Okay. What would be the scenario under which you could do 10 million top line next year? What would have to happen?
I need to generate way more inbound leads, and that's it.
And that's it.
Probably. If I do that, then we just like have, because right now the problem is the ads have a certain kind of limitation because we sell at a certain price point, and I need to sell like gajillion times more customers to do that number. But I cannot. It's gonna be very operationally taxing. Right. So 2 options I have: increase my price by 3 times and get the same amount of customers and just do it.
Yes. Which is hard because you can't.
Which is hard.
Yeah.
It's a little bit different. Or I need to make my customers worth more and keep them longer, way longer than right now. I know my LTV, so I would need to increase my LTV like triple, and I could also do it. And maybe have less focus on the sales, because with retention I could probably have more.
But if you would go, let's say, in burn money, meaning you lose money by, I don't know, building a bigger call center, 5 times bigger, would you be able to recover that investment over some period of time, or that's not certain?
Yeah, maybe, probably. I need them to give opportunities for them to sell, because right now my setter team call center is mostly around warm leads coming in and we're calling them.
Yes.
It's not like cold outbound prospecting.
Yes.
So that's
who's getting the warm leads?
Our paid ad guy, which is a different person, and then me trying to do organic content to get them, but the organic is not so.
So what would be required for you to do what you do now at 5 times the size, just literally like so that you would have a 5 times bigger operation doing what you do now already? What would be required?
More people, probably.
And for more people, what do you need?
More interviews per week.
Of course, yes. And for
okay.
But okay. Could you hire 5 times more people and have them set up in a workstation with the right training, onboarding, etc., let's say like in a short space of time or not?
Yes.
You could have that.
Yes.
So why don't you have it? No, I'm not trying to
Yeah,
trick
yeah.
you into.
No, but it's good thinking.
My question is, okay, you
Yeah.
said revenue, let's say revenue target 3 million. Why not 10 million? And my suspicion is if you start thinking in terms of, okay, and oftentimes you cannot, grow at that level. It's not sustainable. You would lose more. It just like it'd be far more risky. It makes oftentimes far more sense to build the foundation and then build scale. I'm not trying to
No,
kind of
I want
trick
to
you into
scale.
that.
I want to scale.
Okay. But there are some situations, again, one of our companies in Spain where we buy portfolios, we know that we want to grow 3 times next year to tens of millions in investments made. And we could add more countries and do that, even at a bigger scale. We could maybe like not triple, but maybe we could 5 to 10x in 1 year. But that would mean like far more expenses. That would mean that the CEO would be very stressed and nervous. That would mean that we would be burning far more money. It's just not necessary. The stress that would come with all of that is completely unnecessary. It's rather better to spend 1 more year building the foundations, building blocks, to have like good IT system, to have the right accounting processes in place, make sure our team is stable instead of just young, like new people hired and they make mistakes, etc. No proper onboarding. Spend another year, and then you will be able to, in 2 years' time, add the volume that for now you would like triple or 10x, and it would hurt you very badly and it will cost you a lot of money. In 3 years, you could add that volume in 1 month because you have the foundation. Okay, that's what I'm. So
No, I'm
that's a side-
thinking.
But
I'm
going
thinking-
back to the 3 million versus why not 10 million. So if you wanted to reach 10 million, you would need more people to do what you already do, right?
Yes.
Okay.
Well, far more way people.
Yeah, and if you would have far more people, all trained, onboarded, etc., do you know that you would make money, or that would be a risky move that you would potentially lose money? For the
No,
whole
no, no.
thing?
I think we would make money. We would
Okay.
not lose money because the model is still sound, even though we don't have a huge LTV on customer.
Okay, why are you then focused on the call center, like KPIs, actions per customer, per employee, etc., instead of thinking how do you onboard, I don't know, 20 more or 50 more people for next year? And so what I would think is, okay,
I'm
need
like
the-
missing the leads. Like I don't have. Like that's my problem.
Okay,
Like
you need leads. Which leads? You need these warm leads.
Yeah.
Okay, and so for that for there to be more leads, what needs to happen?
I will need to increase my ad spend, which
Ad
I
spend, exactly.
could do it.
Yes.
But it's always this is like my maybe on my mental
It's
block
bottleneck.
because
No, it's
it's
not
no,
necessarily.
it's like because as I increase my ad spend, I start
Yes.
spending. Okay, my record
You will-
spending is like 35K a month,
Which is nothing.
which is nothing. I agree. And then like my sales team doesn't close these leads,
Right, and you waste money.
and I lose money. Yeah, and then I again turn it down. We make money, then I try to get again, and this is like my
Yeah. That's the thing you need to manage.
And my solution was this is my idea to create low ticket products and
Right.
just sell to liquidate ad spend immediately. So I get the leads and I don't worry about the ad spend. That's why I do the event in Latvia. That's why I have a different product.
Yeah,
just
yeah,
like
yeah.
you buy now, and so I spend money and you buy it.
And your average customer that how much money do you spend on these warm leads to get warm leads so that you can sell to?
So my CPA direct cost to acquire a customer is approximately, depends on the country, but it's from 500 to 1,000. Indirect direct cost,
Right,
and then there's
right.
indirect cost.
Yeah. Okay, and then from that 500 to 1,000 that you have to spend to get a warm lead, how much do you make when you sell them? on
I
average?
make my gross profit per customer is around 300 to 500 euros, but it does fluctuate.
Okay.
Gross
Have you-
profit per
yeah.
customer.
So how many years have you been doing this?
4.
4 years. How many of those 4 years? How many have you been loss making?
No, never.
Okay.
The business never loses money.
So why don't you scale 10 times in 1 year, lose a lot of money, but then you're going to be like, if I would come in and I would burn 1 million next year doing what you do, I would be probably much bigger than your business, right? In 1 year time, I would assume. I don't know.
Yes, probably.
Right?
Yeah.
So I think one, I mean, that's kind of Silicon Valley mentality, and that's availability of funding, etc. But you could approach it and I'm not saying you should do it. Just
No,
like
by
maybe
the way,
entertain the mindset.
I want to build a big
just
company.
think about the mindset.
My goal is 100 million company. That's what I want to
The
do.
fact that you have not lost money, it's not a good thing. It's a bad thing. That means you haven't taken the risks, you haven't done the investments. So you've done something at a small scale, and you keep it small. And this growth size and the amount of experiments that you can do is limited by the fact that you're not losing. You don't want to lose money, yes, or you're focused on making sure you have some profits, right? And so I would think if I would start this business from scratch and I would invest €1 million in the first year, like hire a lot of people, I would have negative, customer lifetime value. I would overpay for customers. I would overpay for hiring people. I would overpay for rent because I want to get, a lot of space, and I would buy, new computers, etc. But I would invest aggressively, and in my second year, I could be already at a 10 million revenue. I'm thinking out loud.
That's true. That's true.
So
it could be. There's risk. It cannot happen, right? There's a risk.
For sure. And you need to. And I'm not in a good position to assess this risk. That's what you can understand in more detail and better. But if you start thinking, okay, like next year we're gonna go into a loss. I'm gonna make a salary and not any dividends, profit, or nothing. Just a minimum salary, right? Everything we're gonna invest into the business, and we're gonna lose a lot of money to scale it to 10 million in 1 year, right? And so maybe you end up with an answer that, okay, I don't have the funding. I cannot afford to do these experiments, hire these people, spend on ads to get the warm leads, etc., etc. Then the question is, okay, but maybe therefore I need more funding, or maybe therefore I need a better, chief operating officer who has done this before in a bigger company. That's another question. Have you talked to people, executives in companies that are doing what you do, but are like, let's say 5 to 10 times bigger?
I have talked with them in a consulting basis, but most of them are in a different marketplace like America. So they have different
and you're in
reality.
Europe.
And I'm in Europe.
But you're not the only company in Europe doing this.
Of course.
So there must be companies exactly that are very similar, but are much bigger.
Yeah, thousands.
And what they do differently than you do? Like fundamentally, they spend more money. Clearly, they have more people. I understand that. But what is it that why can you not do what they do? If you had the money, for example, and if you had like maybe more managers to do it, could you do what they do? Or you're missing know-how, you're missing product kind of readiness, sales? No. Okay.
We are very excellent at what we do. We undercharge. Basically, the competition is overcharging like 2 times what we are charging in Europe also.
Right. So you are trying to make money. You are undercharging for your services, and you're smaller than your competition. Roughly, yes? Okay. I would consider, or like look at it from a perspective. Okay, I want to do aggressive investment. Let's say, I don't know, it's hundreds of thousands or 100,000 for the next year. Let's say on an annual basis. Or maybe more, but probably like for you to do more than 500,000, burning is going to be very painful because you're going to be losing 50,000 a month, and that's kind of it adds a lot of stress. So that's maybe not necessary. Let's say I'm going to go into like a 30 to 50,000 euro loss on a monthly basis, and let's see how big the business can become. If you start thinking in those terms, you will be less concerned about your call center actions and KPIs because you can hire somebody to do that. That's not a unique skill. I mean, this stuff can be done by a guy that makes 3,000 to 4,000 euros salary a month, which is a good salary, but it's not a unique entrepreneurial skill. So I would think about, and again, this is completely random. I don't know enough detail about the business and whether it makes sense or not. And for sure, in your 4th year, you don't want to like jump into the abyss and start losing money and so on. You kind of want to do it in your 1st year, 2nd year, but maybe that's what's necessary. But I would just consider.
My next play is the software to increase retention.
Yes.
Have a unique proposition in the marketing world, which most people just offer services. I'm going to offer services plus the software.
Yes.
That's going to do the heavy lifting and be something unique about the company. And I do the software bootstrap, so I pay money to do it. I don't get money. And if I would get money funding, I could do it probably faster,
better,
bigger. Yeah, for sure.
I think I do think the moment you start switching to this faster, bigger mindset, and it's like I said, it's not always something that you need to do, like lose money, borrow, or like raise capital and make losses. It's not. I'm not advocating for that strategy. What I am saying is if you spend your time as a business owner mostly dealing with basically call center stuff that you showed me, which is cool and it's nice and so on, but you're not thinking how do you grow from your existing size to 2-3 times bigger in 1 year, which you can do because your business is not huge.
Of course,
for a huge business it's very hard.
Micro company.
It's a small medium business, right? Then you are effectively focused on operational questions. You're working in the business, but you're not working on it. Yes.
But how would you divide your time? Would you just go?
It's not about dividing time. No. It's not about dividing time. It's about thinking how you can be a bigger company if that's what you want, right? And that's what you want. And one of the ways is you have to incur losses. You have to invest. And you said in 4 years you never lost money.
The business is always
either
cash flow positive.
Yes.
So I'm like paying salary,
Yes.
paying dividends, spending some money
Yes.
on education, training, etc.
If you look at any big or sizable company, oftentimes they lost a lot of money for
Many years, multiple
many
years.
years. And I'm not saying like go Amazon, 11 years of losses, and I mean it's a unique story.
But then I need money, right? I
Yes.
need funding. I can't do it, right?
But that's
I can
when
do
you
maybe
start
3
talking-
months like this crazy.
But then you
spend.
start solving the right problems. You're not solving the problems of your call center actions, how many interviews you do. That's a call center manager job. Your job is to get fuckloads of funding so you can put the pedal to the metal, experiment a lot, have funding that you can risk losing, and figuring out, I don't know, more sales channels, find better people, hire somebody that you pay a 10K salary to that comes from one of your biggest top competitors, and they maybe know more things that you don't know, but you obviously pay them a salary you can't afford, right? With all of that, you're going to be losing money. But then in 12 to 24 months, you might be a much bigger company, or you might lose it. And that's what you need to try to do.
Brother, when you were drawing the business from a 1 million to 200, were you thinking the same way now, or this is like you thinking now?
No. I thought it like back then. That's the way I was thinking. Well,
Yeah.
first of all, I had no money when we started. Okay, but we were.
Man, I love this thing.
We were. I mean, so our specific business case was that we went into different countries. So in one country, it's not like 4 years in a row you're losing money. Then something's wrong with your business model, right? But we were making one business reasonably successful, but I knew that I want to scale it much bigger in other countries, and therefore I had to invest in launching these new countries, and I didn't have the money, so I had to spend time on finding the money, arranging, then hiring the people, and then giving them a target, a more or less ready-made product, and then they would do the rest. And you don't have to care, therefore, about call center KPIs, because you have a good operations manager, whatever call center manager that does this for you. You need to think about funding, about how to scale much bigger, but not by simply like hiring more people, but like fundamentally strategies of how you can do that more. And at the end of the day, most of the cases you will arrive at the fact that you need more funding, which you don't have, and so therefore you have to raise funding. I could be wrong, or partially right, but
I love how you say, Nix, you're not.
But the point is, you cannot build a very big company if you don't invest, and if you haven't lost money, if it's always been cash flow positive, that means you never really invested. Meaning, like proper loss making period of like 1 year, 6 months, 24 months, where you're building. You're buying stuff, you're incurring costs, you're making capital expenses and investments, and then from there you can make much more money much faster. So yeah,
man, I got my butt kicked today, but I love it. I'm gonna fucking do it. I mean, right now it's just like I'm already thinking, how can I get the funding? How can I get money?
I mean,
I'm gonna send pitch decks like after this.
Because this shit is cool. The KPIs.
Yeah, but doesn't
and the
solve the. I love how you said you're not solving the right problem.
You're not solving the right problem. You're not spending time on the right thing.
On the right thing.
If
and that's the problem for most people, I think, right? They're just like stuck in how I am stuck in the trenches. I'm stuck in the nuance in the.
I mean, it's okay to be stuck in the trenches, details, understand the business. I'm not saying you step into a new business, you understand nothing, you start burning money and hiring great people. That's absurd. That's ridiculous. You have to know the details. But you've spent 4 years already in this, so you probably know the details very well. You probably can hire a person. You know, you can call the bullshit on somebody that tells you some stuff that doesn't work. You have operational. You've already have the scar tissue. You have spent the hours operationally to understand this model. So either you are doing something wrong or the model is very limited and it's a bad business model. That's like one or the other, right? I don't think it's a bad business model because it's sales, right? You're generating leads. So that most of the cases, those business models are good. It's about scaling. And if you've never invested, so yeah, I mean, then it's hard.
Man. Okay, so we have 3 things we just covered. So first of all, reflect. Second of all, plan the goals. And third is to execute, do the stuff necessary to do it. And as Matis, I love how you said, think about what's the real problem. Think about how you can 10x yourself. Think about funding because you can be more aggressive. You can have a loss, but then do 3 times, 5 times, 10 times more revenue and actually grow a bigger company if that's your goal. The last thing I think we'll cover as for your planning is to have a good team, is to be with a good people around yourself. Operational thing that we do that helps us to do this is having a daily meeting with the departments and kind of checking their pulse, checking how they're doing, sharing customer wins, sharing personal development wins. And that has been a good thing for us as a company. What kind of things about culture could you mention that could be useful for anybody?
Okay. I think, again, it depends. First of all, it depends on the person that is creating the culture, the founder. Whatever works for you. There's this one thing that says about culture that or culture is one topic, but working with people, it's a bit different, right? More important, I think. But as long as you have some kind of a culture and it's clear and people can identify it, it's more important rather than what the culture is. But anyway, that's a side topic. But in terms of managing people, again, depends on the size of the company. If the company is smaller, of course, you're checking in all the time. A startup phase, small. How many people you have?
15, I think.
15, right. 15. With 15 people is effectively a small team. It's a small department. Yes. Okay. With a small department, you can do check-ins regularly on a daily basis, on a weekly basis, so on. I would. I mean, and to manage 15 people, it's very simple because you know personally each one of them, you know the situation, you know their strengths, weaknesses, all of that. So I guess I mean there's not much to manage with 15 people, right? You can have your weekly meetups. Everybody knows their job, and it's cool. The big question, if you're a founder, is how to get from 15 people to not 150. That's 10x. But let's say, how do you get to 50, 50? And 50 is actually, it's scientifically proven that from an organization of 50 people, the organization starts becoming self-sustainable in terms of its information field, ability to organize, and ability to attract enough resource so that it kind of so that it's independent, meaning it doesn't need constant support from some outside force or organization, right? It can be a 50 people department. If it's a 50 people department, it can afford to have a great leader that is strong and capable enough to make sure that the resources for running this department or company are there, right? And so on and so forth. So 50 is the number I would target in terms of autonomy, and that the organization can start kind of like working on its own, so you're not going to have to do the weekly meetups or like daily catch-ups. Yeah, and it's a sweet spot. I just remember from when we also a lot managed these people, and we spoke about different size teams, etc. There was a guy that was talking from science research that 50 is the number where, if you have a company of 50 people or like a department in another country of 50 people, at that size, you can start relying on them being more or less independent. Anyway. So the question is, how do you get to 50 instead of how do you manage a 15 people team? 15 people team management is nothing. I mean, you have a big family. So the question is how you get to 50. When you have 50, you're not going to know all of them by names. You're not going to be able to remember everything, and you're going to have like real actual management processes in place hiring, firing, onboarding, performance review, all these HR things. And you don't need to do any of that yourself. You can hire a person that is an HR expert that will build you these processes, and that will be one of the 50 people. And so again, that's kind of a infrastructure question.
We could do the channel, you know what? Like the biz bro teaching the
Biz
small
bro,
bro,
yeah.
like, you know how to
The
grow.
older bro.
And we're like documenting the journey from 0 to scaling to 100 million. That would
Yeah.
be cool, you know?
We're already doing that.
And then when we do it, we're like a little bit older guys, wrinkles, everybody's bald, and we
And
just,
nothing's changed.
Nothing's changed, or we just, you know, or something has changed, you know? That would be the worst case
Let's
scenario.
see in a year's time. But I
You
think
know?
it's really like asking the questions of how do you fundamentally get to a 5 times bigger size? What needs to happen? What that's what I also sit and think. Like, okay, I have the business I have now, the operations, the people, etc. What should change in me, in our approach, in our way of how we think about it, to make it not a 10 times bigger, a 5 times bigger operation, and then 5 times bigger from there, and so on and so forth. And then you understand maybe that you need to get somebody to deal with certain problems that you spend time on, so you can spend time on more important things. And so this is the thinking that you need to do, which nobody can do for you. And that's the important part of the job, not necessarily running the reports and the KPIs for people. You can get somebody else to do this management of 15 people for you easily at the 3,000 euros per month, 4,000 euros cost. So think about, you're doing something that's valued in the market at 4,000 euros net salary. While you're a business owner, you should be thinking about what's valuable at a level of 40,000 per month, or 500 or 400, or and that is the funding, these things.
Got it. Cool.
Anyway,
if you love this, let us know. Write a comment, write questions if you have. Stay sharp, and let's catch up on the next episode.
let's go.